professional, and ethical issues. Learning objectives. In this video we will learn about the concept of ethics in accounting profession, ethical principles to be followed in corporate reporting, threats to the ethical principles. Introduction. Let us first understand what do we mean by ethics. As we know, ethics are the moral principles that guide people's behavior. Ethical principles are not necessarily enforced by law. People follow these moral principles with respect to what is right or wrong. In a business setting, ethical behavior is a behavior that applies the principles of honesty and fairness to relationships with all stakeholders. Ethical principles in corporate reporting. ACCA's Code of Ethics and Conduct identifies the fundamental principles most relevant to accountants involved in corporate reporting. Let us look at some of the important principles. Integrity. It is the quality of being honest and having strong moral principles. For accountants it means to be straightforward. Integrity requires accountants to be candid and forthright with a client's financial information. They have to be honest in all professional and business relationships. Objectivity. As we all understand, objectivity is being not influenced by personal feelings, interpretations, or prejudice. The same principles apply to an accountant. Their reporting has to be based on facts. They must not allow bias, conflict of interest, or undue influence of others to override professional or business judgments. Professional competence and due care. Accountants have to maintain professional knowledge and acquire higher degree of skill at the level required to ensure that a client or employer receives competent professional service. They must continuously update their knowledge based on current developments in practice, legislation, and techniques. Accountants must act diligently and in accordance with applicable technical and professional standards. Confidentiality. The principle of confidentiality is about privacy. Accountants have to respect the confidentiality of information acquired as a result of their professional and business relationships. Accountants must not disclose any such information to third parties without proper and specific authority, unless there is a legal or professional duty to disclose. Accounting professionals must not use the information for the personal advantage of the professional accountant or third parties. Professional behavior. Accountants have to comply with relevant laws and regulations and avoid any action that discredits the profession. Threats to the fundamental principles. Now let us look at some of threats to these fundamental principles. ACCA's Code of Ethics and Conduct identifies the certain threats to these aforesaid ethical principles. Let us look at some of these threats. Self-interest. Self-interest threat could arise from auditors acting in their own interest. Self-interests include auditors' financial or other personal interests. A financial or other interest will inappropriately influence the accountant's judgment or behavior. Self-review. Accountants prepare the financial statements. There is a possibility that they will not appropriately evaluate the results of a previous judgment made, or service performed by themselves, or their colleagues, on which the accountant will rely when forming a judgment as part of providing a current service. Advocacy. This threat pertains to ethical principle of objectivity. It is a threat that the accountant promotes, or advocates a client's, or his employer's position to the point that their objectivity is compromised. Familiarity. Many a time, due to a long or close relationship with a client or employer, the accountant will be too sympathetic to their interests, or too accepting of their work. It may compromise the need of maintaining objectivity in reporting. Intimidation. The accountant will be deterred from acting objectively because of actual or perceived pressures, including attempts to exercise undue influence over the accountant. Safeguards. Where these threats exist, appropriate safeguards must be put in place to eliminate or reduce them to an acceptable level. Safeguards against breach of compliance with the ACCA code include safeguards created by the profession, legislation, or regulations such as corporate governance, etc. Safeguards within the client, or the accountancy firm's own systems and procedures. Educational training and experience requirements for entry into the profession, together with continuing professional development. In this video we learned about the concept of ethics in accounting profession. We also looked at the fundamental principles defined by ACCA's Code of Ethics and Conduct for accountants involved in corporate reporting. Further, we also looked at possible threats to the ethical principles.